With a footing in 9 of the 10 ASEAN nations, Maybank and its insurance and Takaful arm Etiqa are well positioned to benefit from the AEC's standardised financial framework. Joining me down the line, Kamaludin Ahmad, CEO of Maybank Ageas Holdings. Kamaludin, what challenges does Etiqa currently face expanding overseas?
Challenges that we are facing are mainly finding the right partner. For the most part, all the country regulators, they won't allow you to come in and have 100% stake in a local operation. And most countries are not issuing new licenses. But really, when you talk about ASEAN, there are 5 countries that are really the most significant, which is Singapore, Malaysia, Thailand, Indonesia, and Philippines. Vietnam is there, but there's still some challenges. There's a bit of challenges going into Indonesia. The Philippines are relatively open. Thailand is quite open, but you cannot have a majority stake.
How will the ASEAN Economic Community's simplification of financial services improve things, and what's the timeline?
That will definitely improve things, but the only setback that I'm seeing is it has not been progressing as fast as we had hoped for, especially in the financial services industry. All the countries are pretty cautious about opening up. When that happens, it will make things a lot easier. In terms of timeline, I'm not seeing that happening in the next 2 years at least, maybe even 3 to 5 years.
Your parent company Maybank already operates across the ASEAN region. What advantage does this give you over your competitors?
I think the main advantage is, being part of this pretty sizable banking group. They have a lot of presence everywhere, and we always have the first right of refusal. But that doesn't mean that everything is to our advantage in the sense that we get everything inexpensive. It is more having the access to discussion, access to distribution as well. In Malaysia, we believe insurance and Takaful is about helping people. We try to inculcate that in every employee in the organization. By having that message, the staff start to do things that they see, if I do this, would that be helpful to public out there? An example would be, in our claims department, they look for social media, for media feed, to check for accident cases. And if they find out there are casualties, then they will start checking whether these are our customers or not. So if they are our customers, we reach out to the family members and we deliver the compensation. We make sure that we are as proactive as possible.
What challenges and what growth can we expect in the Asian insurance industry in 2017?
The growth in demand has really been in medical, retirement. But the challenge has always been, how do you price this right? How do you cope with inflation, medical inflation and so on? But the demand is going to be there and you don't see that slowing down. On the general or property casualty side, there's a lot of infrastructure-driven demand. We see that to continue for the next at least 2 years. Countries like Malaysia, Indonesia, the Philippines, even Vietnam, they're building infrastructure. So we see a lot of growth on the general side because of that. On the life side, the challenge is more of the return that we can give back to the customer. So that's been the challenge, and we foresee that to be even more challenging in the coming years.
Kamaludin, thank you very much. Thanks for watching. As always, you can find out more about ASEAN economic integration at worldfinance.com. And please subscribe for more stories from the insurance industry, as well as all the latest insights from World Finance.